Hi, ladies and gentlemen. Alex Karajanides here with the Alex Karajanides Lending Team. Welcome to your free VA Home Loan Benefits webinar. Thank you in advance for taking the time to watch this class. My goal here is by the end of this presentation for everybody to have a much better understanding of the VA Home Loan and its benefits and how much of a great product this is if you're looking to buy a home or refinance a home. So what we're going to cover is a little history of the VA loan, when it started, who is eligible, how does it work, what are some of the myths and the misconceptions out there as it pertains to the VA loan, and why someone would want to take advantage of this product. So let's go ahead and get started with the history. The VA Home Loan Guarantee started in 1944 during World War II. It was a way for the government to give back returning service members an opportunity to purchase a home with no money down, and back then no credit score. Fast forward today, 70 plus years later, and the VA loan still offers an opportunity to purchase a home with no money down. The difference is that now you need a credit score. So here's a myth or a misconception that I get. I get this question asked all the time is, does the VA issue the loan? And no, they do not. The VA insures the loan. And even in the guidelines that the VA provides us, there is no credit score requirement. The requirement comes from the bank or the lending institution. So the lender is going to issue the loan. They're going to give you the mortgage to buy the property, and the VA is going to insure that loan. So write this down. Most banks right now, most direct lenders and mortgage companies out there have an average credit score requirement of 620. So if you're looking to buy a home and use a VA loan, or you currently own a home and you want to refi it with your VA loan, you're going to need at least a minimum of a 620 on average. So what I recommend all my clients to do is every 90 to 120 days, get a copy of your credit report. Make sure there's no false items on there that are making your score go down as opposed to going up. There's a lot of services, a lot of companies out there that provide services for free that will provide you a credit report. And again, I recommend 90 to 120 days, pull it, have a copy of it, and make sure the credit score is going up. So 620 is the minimum. My rule of thumb is for my clients and my family and my referral partners is try to get your score 720 or higher. It makes it a lot easier, not only when you're buying a home, any kind of loan that you're using, but right now with insurances, credit scores are relevant more than ever. Okay, so there's a little quick history of the VA loan. Who is eligible? So if you served in the Army, Navy, Air Force, Marines, or Coast Guard, and you served 90 days during wartime, and the dates here are on the screen. We have the World War II, we have Korean War, we have Vietnam War, and the Persian Gulf War currently. If you serve 90 days during wartime and your discharge is anything but a dishonorable discharge, you are eligible for a VA loan. Now, if you served during peacetime, and here are the dates here during peacetime, as long as you served 181 days, continuous days, you again could be eligible for a VA loan. And I'll cover in next slides coming up exactly how we confirm the eligibility for you. Another great branch or great services that are offered here is the reserves in the National Guard. As long as you have 6 years of active duty in the reserves or the National Guard, you can have eligibility to use your VA loan. Now, this is new. If you go pre-1993 or before 1993, you weren't eligible as a reserve or a National Guard to use your VA loan. Congress grandfathered everybody in after 1993, so now everybody, as long as you have 6 years continuous duty, you could be eligible for a VA loan. Now, how we find out and confirm that information is with this form right here. It's called the Certificate of Eligibility, or Form 26-1880. Now, you have a couple options here. You could fill this out yourself and mail it to the Regional Loan Center right here in Decatur, Georgia, and then wait for it to come back. Typically, they'll send it back in 4 to 8 weeks. Hopefully, it comes back completed. Or better, my advice is to use a lender like myself and my team, or somebody who's VA approved and specializes in VA loans, and they can get you confirmation of your VA eligibility within a couple minutes. So that's called the Certificate of Eligibility form. Let's talk about who can finance and use their VA loan. So there's only 3 options on who can finance and use their VA loan. Option number 1 is a veteran. So somebody who is either active duty or a veteran by himself or herself can use the VA loan. A veteran and a spouse. So somebody who's married, a veteran that is married, can use the VA loan. And a veteran and a veteran. So a father that served, son that served, they want to buy a home together, they could use their VA loan. A veteran and a non-veteran, or a veteran and somebody who's not a spouse, like a boyfriend or a girlfriend that's not a veteran, you cannot purchase and use your VA loan together. And here's another thing that I get asked a lot. Who could finance? Covered that. Now, how can you finance it and what can you finance it for? It must be owner occupied. So I'm going to cover this a little bit here real quick and some points that I have. So number one is you have to buy the property as your primary residence, and you have to move in as you are going to be living on the property as a primary. So it has to be owner occupied. Now right here, this sentence right here, and I'll cover this later in some advanced tactics, is you only need to live in the property for 1 year. After you live in the property for 1 full year, you can then convert it into a rental. You can then rent it out. You can obviously sell it whenever you want, but you can rent it out, and you can now start using this product, and I'll cover this again in a few slides later on, as an advanced tactic to build wealth. What that means is you can buy a property as a primary residence, owner occupied, put no money down, live in it for a year or longer. Let's say 2 or 3 years later, you decide you want to move, or you get relocated if you're active duty, and then you could turn that into a rental. And now you have a property that is being rented out, and you can build wealth. Love this tactic. I'll cover more about this in the slides coming up. What can be financed? The property has to be in good condition. No tear downs or fixer-uppers. If there's anything wrong with the property, like the carpet is torn up where your 2-year-old can't crawl on it, or there's shattered glass, or there's structural damage, it has to be taken care of and fixed before the loan closes. The Department of Veterans Affairs is really big on safety and health code issues, so it has to be in good conditions. Any permits or any remodels have to be completely permitted. All improvements must have documentation. Let's go to the next slide. What can be financed? Condos are okay as long as they're on the VA approved list. There is a VA approved portal or site that you can go on and research to make sure before you look at a condo and you're interested in making an offer. If you're a potential new homeowner, you want to confirm ahead of time that it is VA approved. And if you need our help, you can ask me directly and I can help you with that. Why use the VA loan? So here is some of the benefits of why somebody would use the VA loan. The number one benefit, in my opinion, the biggest one, is no down payment. It's pretty much the only product available. There's another product called USDA, which is for rural areas specifically. But other than that, this is the only product available that you could purchase a property with no money down up to the county limit. So in San Diego specifically, our county limit is $562,350, which means if you bought a property and the purchase price was this number or lower, you could buy that property with no money down. There's a formula we use if you wanted to buy that property above that purchase price, and it's still a lot lower as far as a down payment requirement than every loan that's available right now. Another great benefit is no private mortgage insurance. So anytime you buy a property and you need mortgage and you're putting less than 20% down, so a conventional loan with less than 20% down, or even an FHA loan, which the minimum requirement is 3.5%, there's always going to be what's called private mortgage insurance, or PMI. With VA, there is no private mortgage insurance. It's an amazing benefit. Those are the top two benefits right there. Another great benefit is closing costs can be borrowed. You could get a gift for closing costs. You could borrow them against your 401k. There's a lot of creativity and a lot of flexibility as it pertains to closing costs and how they're going to be paid. The seller could pay your closing costs. The lender could pay your closing costs. Great benefit with this product. Another one, or a few of them, and I'll cover this more in detail on next slides, is the funding fee. It's a one-time fee paid to the VA, and there's ways where actually we can avoid this fee. Credit requirements and income requirements. When you compare the VA loan to a conventional FHA, I believe the VA gives you the most flexibility in regards to requirements and being able to get approved for this loan. And we also have a great jumbo loan. If you could afford and wanted to buy a home, you could go all the way up to $1.5 million on a VA loan. It's probably one of the best jumbo loans out there when you compare it to interest rates and down payment requirements. Another great option, a great benefit for the VA loan is anytime the interest rates, the market dictates the rates, and anytime the rates get lowered to 0.25% or 0.5% lower than what you currently have if you own a home and you have a VA loan, you could do what's called a streamlined refinance. It's called a VA IRRL, interest rate reduction refinance loan. And this is unlimited times you could use it, as long as there's a benefit to you, and as long as you typically can reduce your interest rate by 0.25% to 0.5%, it's a great time to use it. You can also do a cash out refinance. If you own a property right now and you have a VA loan, you can refi and pull some cash out, pay off debts, invest in the stock market, buy another property. If you have a conventional loan right now, you can always refi into a VA loan if you have your VA eligibility. So another great benefit right there. Let's talk a little bit about some myths that I see out there as it pertains to the loan. And this is from the consumer, the potential homeowner, the current homeowner, and also the real estate professional out there. I get a lot of myths out there, and I want to just cover it really briefly. So one of them is I can only use my VA benefit for my first home. That used to be the case. You use your VA loan, you can only use it one time, and that was it. That's not the case anymore. The VA loan, if it's paid off, you can use it again. It never expires. So it's a great benefit. You use it once, you own a home, you sell the home, you can use it again. You use it once, you refi the home into a conventional loan because you have enough equity, you get your VA entitlement back, you can use it again. So it never expires. Another one I get all the time is the seller, so this is a buyer now telling me this, the seller won't accept my offer because they have to pay points. That is not accurate. Nowhere in the VA handbook does it require the seller to pay any of the closing costs for the borrower. So the seller could pay the closing costs if he or she wanted to. The lender could pay, the agents could pay, anybody could really pay for the closing costs. So that's a myth and a misconception out there that I get a lot. I can only buy a house up to $240,000. I get that all the time. That used to be the old benefit, which was the old limit. That's not the limit anymore. In San Diego, the county limit is $562,350. In other areas of the country and other counties, the county limit is either higher or lower. So what I recommend is when you're looking to purchase a home, find out what county you're in and find out what the county limit is, and then you could have a better understanding, obviously, of how much money or how much of a purchase price you can go up to with no money down. Another one that I get a lot is spouse's income can't be used to help qualify for the home. That's not accurate. If your spouse is working and she has a stable job in the same line of work for at least 2 years, and we need her income, we can use that to help qualify for the loan. This is a good one right now. This is actually a great benefit. I can't allow someone to assume a VA loan if they are not a veteran. That is false. One of the benefits, another benefit of the VA loan is it is an assumable loan. So if you purchased a home today and you use your VA loan and the interest rate was 3.75, and 5 years later you're looking to sell your home and the interest rates are 5 or 5.5%, you can actually sell the home to somebody and they can assume your loan and your interest rate. It's a great benefit. So anyone who is creditworthy can assume a VA loan. They don't have to be a veteran. However, they do keep part of the veteran's eligibility, which it's something you want to get confirmation on, and I can explain in more detail in person. Here's another myth that I get a lot. There is always a funding fee no matter what. That's actually false. In slides coming up here, I'll explain how we can avoid a funding fee or how we can reduce the funding fee. And actually, I'll also explain what the funding fee is. If the veteran has a qualified VA disability of at least 10% or more, they are exempt from the funding fee forever. And again, I'll explain that in a little bit more detail in slides coming up. My down payment, this is another one I get, doesn't affect the funding fee. That is not true. That's false. If you put at least 5% down, your funding fee gets reduced. And I'll show you a graph here shortly of what that means. I don't have 2 years of service eligibility, so I won't be eligible for a VA loan. That is not accurate. That is false. There are a number of situations that less than 2 years of eligibility isn't required or is okay. Early discharge, medical discharge, there's a lot of reasons of how that can be worked. So that is actually a false one as well. I get that all the time. So let's talk about what the funding fee is right now. So the funding fee is actually what has kept this program going for so many years. And depending on how much money you put down, this is a one-time fee you pay the VA through the loan. So this is not an out-of-pocket expense. It gets rolled into your loan. But if you are entitled to 10% disability or more, the funding fee is waived forever. So that's number one. Now, if you're not entitled to 10% disability or you are entitled to no disability at all, then this is the graph you want to look at. This is valid through September 30, 2016. So if you're not putting any money down and this is your first time using the VA loan and you're purchasing a home, 2.15% of that purchase price gets rolled in to your loan. Now, if you're using your VA loan for the second time and beyond, and you're not putting any money down, then it goes to 3.3%. If you're putting 5% down, it gets lowered. Actually, here it gets lowered by more than half your second and third time. So I'd recommend if you're using a VA loan again, and you used it before, I recommend putting at least 5% down because this cuts your funding fee by looks like 1.80%, which is a big amount. And then 10% down, it gets lowered again. If you're in the Reserves or National Guard, same idea. There is a percentage hit for the funding fee. Now remember, if you're entitled to 10% disability or more, there is no funding fee. It's zero. Okay? The BAH, let's talk about the BAH a little bit more. This is something very popular, especially here in San Diego or wherever there's military installations and active duty military families. So the BAH, which stands for Basic Allowance for Housing, How valuable is it? Just it's tax-free money. The government's giving you tax-free money, and here's a graph I put together just to give you an illustration of, and this is just an example for illustration purposes, of potentially what you could do if you were active duty and you had a 25-year career in the military, starting from E2 and ending in an E8. And if you look at this money, this is per month. This is tax-free money that the government's going to give you to use to purchase a home that then you can write off your taxes on the interest that you're paying. I mean, it's one of the most amazing benefits that the VA has if you're active duty. So if you're active duty, you're getting this BAH, and you can use it to rent. You can not use it and live on base, or you could use it and buy a property and build wealth. It's tax-free money. So I think it's very important that people have a better understanding of it. So this is a graph again that shows what in a 25-year period what you can accumulate, and this is $633,000 and change that you've accumulated, or the equivalent of almost $800,000 gross taxed income that you could use or could have used to purchase a home. And then remember what I said, as long as you live in it for 1 year, you can then turn it into a rental. So great benefit. That's BAH. What will you do with your BAH entitlement? I could think of plenty of things you could do. Obviously, for starters, buy a home, build equity, build wealth, get a tax break. Potentially, if you're active duty, a lot of people who don't purchase a home, why don't most active duty personnel purchase in San Diego? It's because they feel that they're going to be living elsewhere. They're going to get their orders and they're going to get stationed somewhere else. But again, like I told you guys in the beginning, if you buy a home and you live in it for 1 year, then you could turn it into a rental, and you can have a property management company take it over for you while you're getting stationed to another area of the country. So an amazing benefit. I get this asked a lot too. What if my house never goes up in value? Should I still buy a house? Well, you got to live somewhere, and the answer to that question is yes. With rent goes up. There's no tax benefits. There's no ownership benefits at all. There's no equity. With purchasing a home, your payment stays the same. Typical loans are 30-year fixed loans, so the payment never adjusts. You get a tax benefit for as long as you own the home. Your equity builds up. In California specifically, our average appreciation in the last 30-year window is almost 6.5%. Even with a few bad markets that we've had here in the past 10 years, the average is still about 6.2%. And you own the house. You can rent it to somebody else and have them pay your mortgage, and you can eventually sell it and then benefit from the equity that you're going to gain from it. Let's talk about what are the steps to a successful VA closing. Okay, so this is now a point where you decided, yes, I am in a position where I know I have my VA eligibility, and I want to go out there and I want to potentially buy a home. So the number one thing you need to do is you need to find yourself a great lending team, somebody who specializes in VA loans, somebody you obviously like and trust, and has a tremendous amount of knowledge of the VA loan and the benefits that come with it. So my team and I are the number one dedicated VA lending team here in Southern California. We specialize in VA loans. We've done a lot of them. We know how to work the loan, how to get it from the start line to the finish line in the fastest way possible with the least amount of headaches, and we love it. So that's step number one, find a great VA lending team. Step number two is get yourself pre-approved. And there's a difference between a pre-qualification and a pre-approval. A pre-qualification it's just an informal conversation you're having with somebody, no obligation, and you're telling them how much money you're making, you're telling them how much debt you have, and the conversation is going back and forth, and they come up with a specific purchase price and loan amount. It's not what you want to have. You want to have a formal pre-approval, which doesn't cost anything. It doesn't obligate you to doing a loan. There's no fee for it, but what it does is it gives you an accurate number of what your full purchasing power is. And the benefits are you'll know exactly how much you can afford before you shop for a home. So you want to have a comfort zone in mind. You want to have a number of what that number is for your monthly payment that you're comfortable making, because when you buy a home, you have your mortgage payment, your property taxes, and your homeowner's insurance. And if it's a condo, you have HOA dues. All that combined together is your monthly payment, and you want to be comfortable with that payment. You'll know what your monthly payment is, so you'll know what your comfort zone is. You know what your total investment is. Now, there's no down payment for VA loans up to the county limit, but if you go over the county limit and there's closing costs, there is an investment that you need to make for your, what we call it, cash to close. So you want to know what that is ahead of time. Sellers will definitely take your offers way more serious when you're fully approved from a reputable company who specializes in VA loans. And then you can make an offer as soon as you find the home you want, and there you go. Now here's something that I want everybody to pay attention to and write this down. When I mentioned your comfort zone, all this potentially could be included in that payment. So you have your mortgage payment, which is principal and interest. You have your homeowner's insurance. You have your HOA dues, potentially Melrose, depending on what part of the country you're in. Mortgage insurance, this does not, you don't have to worry about this for VA loans, but if you weren't doing a VA loan and you were putting less than 20% down, or it was an FHA loan, you would have mortgage insurance, and then you have your property taxes. All these are going to be included in your monthly payment. So when you're doing your comfort zone, make sure that you have a payment that you're comfortable with, because all this is going to be included. Some of the documents you're going to be asked for that are pertaining and applicable to your situation are all these. So you're going to need your bank statements for the last couple months, the current ones. You're going to need your last 2 years tax returns, last 2 years W-2s, pay stubs or LES if you're active duty, if you went through a bankruptcy, if you went through a divorce, we're going to need all that documentation. So just be prepared. You're going to have to gather all these documents, again, what's applicable to your situation. We'll run a credit report. As a lender, we'll make sure that the credit report, like I told you from the beginning, is at least a 620 credit score or higher. We'll do a VA loan analysis and make sure we get a computer approval, which in our world is called a DU or LP approval. Then the next step is you find a very, very good, very professional real estate agent that knows the market and knows the VA loan just as well as your lender. And we have quite a few real estate professionals that we partner up with that we can refer to you. So you find a real estate agent, and he or she will make an offer on a property on your behalf. After that, well, before that, it's going to go back and forth, get ping-ponged back and forth until you guys come up with an accepted price. The seller accepts your offer. You now have what's called a fully executed purchase contract with an escrow period, typically about 30 days. So we will then start your official loan application here. Day one, we receive your purchase contract, we order the appraisal, and we get started with your loan application. After that, the application with all your paperwork goes to processing. The appraisal has already been ordered. Typically takes about 5 to 10 days for calendar days for the appraisal to come back. File goes into processing to get reviewed. And then it goes into our underwriting department. Once the appraisal comes back, we have to confirm that the value of the property is the purchase price. If the property value comes in lower than your purchase price, the VA will not insure the loan. So the transaction will have to be renegotiated, and either the purchase price will have to be lowered, or you as the consumer or potential homeowner will have to come up with the difference, or you and the seller somehow will have to meet in the middle and divide it. Or the fourth option is you would just cancel the escrow. So we have to confirm the appraisal comes in. Once it comes in at value, we are then moving along. We get the full approval from underwriting. Now we're home stretch. After the full approval from underwriting comes in, we typically have conditions that we have to meet through title and escrow. Sometimes our clients are involved, sometimes our agents are involved. We get those conditions in, we clear them, and then our docs get prepared for our official signing at escrow. Our closing is scheduled. An appointment is made from the escrow officer with you, the potential homeowner. You sign your documents, and typically we will sign, fund the next day, and record, and then you will get the keys to your home. This transaction from start to finish, from the day your purchase contract is accepted to the day you get your keys, typically happens in less than 30 days. The average, I would say, is about 26, 27 calendar days. So a 30-day escrow is typically what we're seeing out there. And then congratulations, you are officially a homeowner. Great times. And that will cover it. So any questions about anything we covered today on any of these slides, what you could do is you could go to my website at mylenderalex.com, fill out a contact us form, and then put all your questions there one time. Send them to me. I will personally answer your questions within 24 hours or less. and I appreciate everybody taking the time to watch this. Please help us spread the word. There's a lot of veterans and active military families that I would love to educate more on the benefits of the VA loan, so please do us a favor and help us spread the word. This is going to conclude our VA class for today. If you found great value from the content I shared, and if you need additional information, like I said, or have any questions, please either visit my website or forward my website to anybody that you would believe is interested in this information. And you could also call me direct. This is my cell phone right here, 619-701-5291. Again, thank you again for taking the time to watch this class, and God bless and take care. Thank you again. Bye-bye.